Hey, good morning. Let's go over today's trade plan. So in the overnight session, the market opened on a large gap lower into some areas of support where buyers stepped in, and since then the market has been balancing within a range. Now, looking at the bigger picture, ES has sold off around 100 points over the last 5 sessions. So the market is getting oversold and overextended into some decent areas of support where responsive buyers are likely to be active. And that's why our short-term bias today is going to be neutral, while the intermediate term bias continues to be bearish. And anytime our short-term bias is neutral, it means that we have to be more flexible with our real-time intraday bias, and at the same time, we give more weight to that real-time intraday information. So if in real time we're continuing to see broad market weakness and sustained downside momentum, and the sellers are managing to hold ES below the 2750 to 53 initial resistance zone, then that would serve as a bearish indication, and from there the market could head down into the pre-market support at 40.5 to 42.5, and then a break below that area would open the door for a move back down towards the overnight low at the initial support zone at 31.25 to 33.25, where buyers may be active, but we will have to assess the situation in real time. And then below the overnight low and the initial support zone, we have a larger time frame zone at 26 to 29, where buyers can be active, and we would need to see some pretty decent and sustained downside momentum to continue selling off below 27.26 and 27.23. On the upside, a breakout above 27.50 to 53 would signal short-term strength and buyers stepping in a more aggressive way, and from there we could head higher into the 64.5 to 67.5 zone where sellers can be active on first test. So with our intermediate term bias being bearish, anytime the market gets short-term exhausted into one of the resistance zones above, sellers can step in, and if we get a momentum shift off of one of these resistance zones where the market hits resistance and then the tick starts holding below zero, then it could result in continued selling and we could get a better move off of that resistance zone. But that's something that we will need to assess in real time. So again, heading into the open, our short-term bias is neutral, which means we have to be more flexible and open to the market moving in either direction, but our intermediate term bias is still bearish, and if the sellers can hold ES below the 2750 to 53 initial resistance zone, then that would open the door for the market to balance at lower prices and perhaps head back down into the initial support zone and even the larger time frame support below where buyers can step in.